Okay, welcome back. Sunday, 4th of May. It's 12:54 UK time. This is BTC USDT, and we are currently, where are we at now? We're on the day chart right now. So let me just get us on the 4-hour so we can see a little bit more details. There you go. Okay, so price is currently at 95k, 95.5k. And we have been monitoring this rising wedge pattern, which I had noticed kind of was forming from early on in this year. March price was kind of hanging in between this rising wedge pattern. This was actually drawn on the day time frame, so let me just go back to the day time frame so you can see a bit more what I was looking at. So on the daytime, as we know, higher time frames have a higher probability of playing out the actual patterns and trend lines and resistance, support resistance lines. So I like to use the higher time frames, like the 4-hour, the 1 day and everything, to kind of like monitor to get a good indication as to the direction of things. Of course, if you're day trading and stuff, you might not be looking at this larger scope, but I just think it's a good idea to get a general idea as to the direction of what's happening with the price action. So rising wedge was forming earlier this year, broke to the downside, came, retested the bottom of trend line on the outside of the pattern, and went the direction it was likely to go. 70% chance of it breaking to the downside, rising wedge pattern. It now found its way back in 22nd of April and has started to play within this same rising wedge pattern. You see, I just extended the lines and just notice how it just, the price action, let me just zoom in a bit. Notice how the price action has just kind of been playing within these lines again. And as we saw the previous time, it had a break to the downside. I am looking for another break to the downside with this. There's a few reasons why. We have had a run up from 73k roughly all the way up to 98 in the best part of what, 2 weeks or so. Okay, the RSI is currently registering as oversold. I set my RSI at 80 on the higher and 20 on the lower. You see a lot of times it's 70 and 30. I like the 80 and 20 because it just gives me that bit more confirmation that things are oversold, and that little bit more of an edge on my analysis. So realistically, me personally, I wouldn't be looking for any bullish moves. I believe that due to this run up, due to where the RSI is on the daytime frame, due to the actual volume sloping, even though the price action is sloping upwards, volume sloping downwards, I'm looking for more of a breakout of this rising channel, a breakdown to the downside, and maybe buying in on a retest of some sort. Now price could, let's just open this up a bit, reduce this right. So for example, price could come out of this, break down here, and sometimes you don't get the retest. Sometimes it just carries on straight down. We have this support resistance line that's in. So if it came down to this area and started printing more green candles, I'll be looking for that lower high than this high to get in on the trade. That will be my entry point. And then of course, if you get the lower low, you are now kind of confirming that now you're now on a downtrend. And this, like I said, this is the day candles. So this will be possibly a move that we playing out, take a lot longer than on the smaller time frames to play out. So it just depends on how busy your life. If you've got time to sit and watch the charts all the time, then that's great. You can do that and you can kind of do the day trade thing, and that's okay. But if you just kind of like got a busy schedule, and I like the higher time frames because they stay a bit more true to the actual trend line, support, resistance stuff. So breaks out, retest, buy in with a short I don't like to do anything less than a 2-to-1. So stop loss will kind of be set back inside the pattern. So let's say it broke out this point. Stop loss will be set kind of 50% into the pattern, and I'll be going for a 2-to-1 on the downside. Now, there's quite a few things that's in my favor, to be honest. You do have this support resistance line. So if I saw price come out, I bought in on a retest and I see it get to this area here at 91k and starts to put in some next highs, or doesn't quite break past that area. Well, what I would do is I would definitely bring my stop loss to break even at that point. And some people, you can just leave it, but I don't know, like I feel like because of the support line, you got to watch it. If it breaks past and retests here, then I'm happy days, like you're kind of like more likely to see it get the result that you wanted. But watching it closely, you might decide that, okay, I was going for a 2-to-1, looks like things are going to pull the other way, and collect what you're going to collect. So if you had £100 on there, you could either bring your stop loss to break even, or you can just collect what you've grabbed so far. But I feel like realistically, if it did break out, you'd have a good chance of hitting this take profit area, because another thing, it's somewhat close to 50% of this run up move, which when things are kind of like oscillating with the price action, 50% pullback is very common. So it's just, I'd say that's about 40% at the take profit point. So it could easily work. And there's everything in there's more saying that it would work, this trade would work, than not. So realistically, you could just leave it, and I'm pretty sure that you have a good chance of collecting. Anyway, so where does that leave us? If we go into the 15-minute chart now, 15-minute chart. So right now, let's get the RSI back on a smaller time frame. If the RSI is kind of like showing oversold by hitting 20, and we had the price action at the bottom of this trend line. This is the shorter time frame, mind you. Yeah, and then we started to put in some more green candles. That could be a possible bounce idea, but I wouldn't be too hot on it getting past this support resistance line at 95k. It would more be a trade that will be happening between the bottom of this trend line of the rising channel and this support resistance line. So buying in here, collecting by here, stop loss just beneath, looking something like this. Where's my long? So buying in at this point, I wouldn't actually, I wouldn't say collecting at the actual support resistance line, because a lot of the time these things are happening, winnings are being collected early. So I like to say 70% of the actual move between the entry and the next support resistance area, something like that. Basically a 3-to-1 or something like that. That would be the kind of trade you're looking at. So price comes down here, it buys you in, runs up here. If it comes out and breaks below, then gets you out of the trade, and then you would flip, and you'll go back to looking at the retest of the bottom of the rising channel and turn it into a short trade instead, because that idea would have failed. Once you get at least a candle on the 4-hour close outside of this rising channel, once you get a full candle with the body close outside of it, like be prepared for it staying out of that pattern for good. So that's my analysis for today. Hope you enjoyed the video. I'll see you on the next video.